Good morning, guys, and listen, welcome to your market report. Today is Thursday, March 29th, 2018, and the first thing we're going to take a look at is we're going to start the charts right here. Bam. Okay, and the first thing we're going to look at is we're over here and we're going to look at cryptocurrency. We're on to Bitstamp. And we're at 74.07. That's where we're at right now. It's been having a hard time. It's really struggling, cryptocurrency. And I didn't really expect it to go this low before the crash, to tell you the truth. This is surprising me, the fact that the money is coming out of Bitcoin this fast before the crash. I expected it to go down like this after the crash. So it's taken me a little bit by surprise. I'm wondering how low it's going to go here. I don't see it before the crash. I don't see it going too much lower. Now, the stock market, we're going to switch over. Well, first let's take a look at cryptocurrency market capitalizations before we go running away from cryptocurrency. Maybe we'll talk about it for a minute more yet. $276 billion market cap. Bitcoin's at 7,400. Ethereum's at 407. In the short term, I think that this I don't think it's going to go down a whole lot lower than what it is right now in the short term. I think after the crash occurs, the stock market crash I'm talking about, then we're going to see a massive drop in Bitcoin price. But in the short term, I think she's just about bottomed out in the short term. And of course the stock market is trying to rebound a little bit, but it's not really a rebound. I'm going to explain that in a second. So I think that this is just about Bitcoin might make it down, I think, to about 7,000 in the short term. It's in the longer term that we're in for the big crash in cryptocurrency. And then it's in the longer term past that, when you look out into the future past that you're going to see a massive bull market in cryptocurrency. But that's quite a ways out into the future. That's after we're past the stock market crash and the Federal Reserve has responded with more stimulus packages and stuff, and the dollar's in the process of dying. That's when the next cryptocurrency, it's going to be the massive bull market. It's going to be the bull market of all bull markets in cryptocurrency at that point. But we got to go through a lot to get to that point. And in the very short term, I can actually, I'm thinking I might buy a couple Litecoins at these prices, you know, because in the very short term, and then sell them off before the crash. Because I think that the crash is coming after the stock market crash occurs, and I don't think we're going to get the stock market crash until we get to 3.25% on the U.S. 10-year. And I've been saying that all along. So now let's move on to the Dow Jones and take a look, and I'm going to explain something to you here of what we're seeing. We are seeing an update, 320 points up on the Dow Jones Industrial Average today, but you got to understand something. Look at this peak at 26,616. And look at the peak today at 24,168. Okay? Draw a line between the two peaks. It coincides perfectly with these tops. Okay, so we got a top here. We got a top here. We got a top here. And this has got to go up a little bit higher before it makes at the top that coincides with this line. If you draw this line. Okay, now watch. I'm drawing the line down, say, and I hit this top. I hit this top, right? And now it's coming down, and where's this top going to be? If I draw that line. Okay, I got the line here, coming down to here, here, and here. We can see the top's going to be around 24,500. So she's got a couple more hundred to climb before she hits that top. But what else do you see here? You see this is a descending tops. Down, 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 down. So even if she makes that top of say 24,500, which is a couple hundred points higher than she is right now, even if she makes that top, still this is a descending pattern of tops. these tops are lower. Each one's lower. So it's lower highs and lower lows, basically, because look at this low. This low is not as low as this low, and this next low is going to be even lower. She is on her way down. Even though we've had a couple up days, the stock market is still on its way down when you look at it that way. What am I looking at? The 3-month chart. Okay, let's go to the 6-month chart. It might show you better, and then you can see it even better. See, this top right here, and this top right here, this top right here, and now it's making this top right here. In fact, it's sloping downwards even faster at this point, even though it's up today. It's just a 1-day up. It still has, it needs to make a top in around right about here someplace. And then when it makes that top, then we're going to get a descend way down here to about 23,000. This is going to continue. This is going to continue. When the market drops below 20,000, that's when the panic and fear is going to set in. That's when we're going to get the drop in the price in Bitcoin. But until then, they're going to be, when it gets down around 23,000, the stock market, or 22,000, they're actually going to think that Bitcoin's a safe haven asset, and they're going to run to it, and they're going to buy in. And we could see, because Bitcoin's went down so far, it's dropped so far for the last, a couple months, they could start to run back to it, thinking to themselves, well, hey, you know what? This is a safe haven asset, and the stock market's going down. Where am I going to put my money? And as they see Bitcoin going up again, then they all rush in, right? This is going to be a trap for them, because we could see Bitcoin go up maybe to 10,000, back up to 10,000 again in the next few weeks before the big crash in the stock market. Once that stock market goes below 20,000, then goodbye Bitcoin. If you're in Bitcoin, kiss your butt goodbye at that point when the stock market drops below 20,000, because then we're going to see the big crash in Bitcoin along with the stock market. And it's going to be a bloodbath in Bitcoin at that point. But it's not over. When I say Bitcoin, I mean cryptocurrencies, by the way. It's not over, because what's going to happen is when this whole thing turns around, when the economy turns around and we're in for our stimulus programs, which are going to cause an economic recovery but destroy the dollar, at that point we're going to see the biggest bull market in cryptocurrencies ever. So if you buy them when they're at the bottom after the big crash that I'm telling you about in cryptocurrencies, if you buy them and they're at the bottom, and you'll be able to, you're going to have your opportunity, you'll be able to scoop them up on the cheap, right? It's coming. It's coming. Keep your powder dry, guys. It's coming. You'll be able to scoop them up on the cheap. If you scoop them up on the cheap at that time, you're going to be able to come in later when the bull market hits, and you're going to be able to HODL them to the moon, and then they're going to go up and they're going to land on the moon, and they're going to stay there. And so you're going to be a happy camper at that point, you know. But it's all in the timing. You'll find out on my channel. I'm not going to keep it to myself when I start to buy. I'm not going to give you guys financial advice, but when the time comes when the cryptocurrencies are there, when I think they're there, I'm going to tell you what I'm doing, and you can do it too. You know, simple as that. It's up to you. I mean, it's not going to be financial advice, but I'll tell you what I'm doing. Now, right now, I'm thinking about getting maybe two Litecoins or something, maybe. And I'm going to wait until the peak of this little thing where I think they're going to come in and buy cryptocurrencies right now. I think they're going to go up a little ways. Cryptocurrency might go back up to 10,000. And then I'll sell it because the big crash is coming. And I might take advantage of that little bump, you know, before the big crash. And that little bump is going to fool, if it happens. I'm not saying for sure it'll happen. I think there's a good probability of it, though. It's going to fool an awful lot of people. It's going to really fool an awful lot of people into thinking that cryptocurrencies is a safe haven asset. We're going to find out when the big crash hits that it's not a safe haven asset. That's a speculative investment, and that's when they're going to rush to gold and silver. 20,000 is a mark on the Dow Jones when they start to turn back to gold and silver out of fear, and they start to drop start to get nervous and start to drop the cryptocurrencies. 20,000 on the Dow Jones. When the Dow Jones drops to 20,000, wait for it. It's coming. Any good trader can tell you, if you really want to make the money, you got to wait. You got to wait. You got to be very patient. And this is what I'm being patient for. I'm waiting for this. I know that this market's rolling over, and I know she's going to go down to 20,000. And I know that when she hits 20,000, as soon as it hits 19,000, by gosh, that fear is going to really enter into this whole thing at that point. They're not frightened right now. They're all thinking, oh, this is just a little correction. They're all thinking correction. And today, when they see it go up 270 points like it is now, they're thinking, hey, this is great. The world's all wonderful again. But look at this. You see this line? Now see where it stops right there? That market has to climb, about 300 points before it reaches the top. That's like one of these tops. If it doesn't, if it tops out right now at only up 270, it starts to go down again. That means it's even sloping downwards even faster. It's accelerating its downward slide. A slide to hell. Okay, so now let's take a look at the silver price. What we're looking at is 1632 today, and silver seems to be starting to try to bounce back just a little bit. I tend to think that right now it's going to try to bounce back up into the range of probably 1660, and then they'll smash it again. So somewhere about right here, 1660. The green line, by the way, is today. Red line is the blue line's yesterday, and I think the red line is the day before that. Or is the red line yesterday? Yeah, the red line's yesterday, and the blue line's the day before that. And so what we're looking at here is a couple days ago, it was quite a little bit higher. It was almost 1680. Today it's like 1630, and but it's moving upward slowly today. That's what it's doing. Bonds and rates. This is why the stock market, right here, is why the stock market has bounced the last couple of days. The bounce today has got everything to do with this right here, this U.S. 10-year going down to 2.75. But it appears like it's stopped around 2.75 right now, and it doesn't appear to be going down too much farther or faster. And I said before, 2.7 is the bottom limit. So it's got a little ways to move yet before it would hit 2.7. We got a little bit of room yet, but it's on the bottom side of what I thought it would be, and that surprises me. It surprises me. It is. The bonds are moving better than I thought they would. I really tend to think that the Fed's not really buying them, but these buyers that are buying them are going to be being saturated with them shortly. This is just something that where it's a novelty for them to get these rate at such a high rate of return, because for a long time there the bonds were a lot, the interest bearing on the bonds was much lower, and these bond buyers are moving in like sharks because basically they're getting a higher yield. And so what's happening is they're there with their money ready, but there's a limited number of them, and there's an unlimited amount of these bonds that's going to be coming. And so these bonds are just going to keep coming and coming and coming, and after a while there's going to be no buyers left. And that's when we're going to see the bond crash occur. But right now, this is a novelty, these rates being up where they can make a little bit of return or yield. And this is exciting these buyers, and these buyers are the people who think the economy's always going to stay this way. We're never going to have any crashes in bonds, blah, blah, blah. These are the guys who believed in the economic recovery for all of it. They believe in everything that the market tells them. They believe everything they're told, the true believers. And they've got a lot of money, and they've been bringing it in to buy scoop these bonds up because they see a bargain on these bonds. And they think to themselves, hey, you know what? Bond prices are going to go back down. The yields are going to go back down again. The yields are high right now. I'm going to jump in there and buy some of these high-yielding bonds. And this is what they're thinking, you know? And what this is creating is this is creating buyers. But they'll get saturated because the Fed's not going to stop. The Fed's going to keep throwing these bonds on the market until they saturate all these buyers. and then we're going to see the yields start to climb again. I don't think the Fed's the buyer. I really don't. I know an awful lot of guys have been out there. They've been telling me, "Hey, you know what, Glenn? You're wrong. The Fed's buying them all." And I just don't really believe it. I don't believe the Fed would actually be selling and trying to buy at the same time. I think that would just be completely. I just don't really buy it altogether. I'm thinking that these buyers are actually coming in, but I'm not absolutely certain. I'm not absolutely certain that you guys are not right about that. That the Fed could be buying. It is a possibility. Let's put it this way: I do suspect them, but I don't really think that's what it is. I think that these buyers are people that are chasing yield, and I think this is going to be proven out in a month or two. And maybe within the next 3 months, this is going to be proven out because these bonds are just going to keep coming because the Fed's now trying to sell all this garbage, you know. And if that's the case, then we're going to see. So we're going to have to wait and actually see what happens with this. But I can see the yields rising, and like I say, the U.S. 10-year 3.25% is the mark where the stock market's going to break. That's where she's going to break. So cryptocurrency market capitalizations, we've done that. And now let's take a look at the dollar today. 90.09. Right? Now, you know, there's the dollar's up just a tad. There's an inverse relationship between the dollar and oil. What's oil doing today? Well, we can see over the 5-day chart that oil is down. So the dollar's up a little bit, and oil's down just a little bit. So you see the inverse relationship between the oil and the dollar. We're in big trouble when this inverse relationship ends between the oil and the dollar. And the only reason why they have this inverse relationship is because the dollar is priced in oil. Now, the Chinese now are trying to break that. They're trying to destroy the relationship between oil and the dollar. They're basically cutting the dollar free from everything. You see, going back to 1971, the dollar was pegged to gold. That was broken by Nixon. Then the dollar was pegged directly to oil. And it's been that way ever since. Now, if the Chinese break that peg to oil, what's the dollar pegged to left? Then the dollar becomes a true fiat currency. And fiat currencies don't survive. The only reason the dollar has survived for over 40 years now like this is because it's been pegged to oil, and the dollar's been worth the oil it's worth. But, you know, an awful lot of these guys for ages said, well, the dollar's pegged to nothing. That's not true. The dollar's pegged to oil. They're breaking that peg now. And the dollar's going to become worthless. Because China, and it's not going to be something that's going to happen like tomorrow morning. It's going to be an erosion. It's going to be something that happens over a period of months, if not years. Not really so much years, but over a longer period of time. It's not going to be something that's going to happen overnight. The dollar has been too dominant for too long to disappear overnight. But we're going to see the dollar disappear. It's going to go down, 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 and I've said this before, and I'll give you the marking point of the dollar. 70 on the U.S. dollar index is the marking point where the dollar really starts to die. The dollar is going to be slowly going down, 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 down until it gets to 70. When it gets to 70, it drops below 70 on the U.S. dollar index. Then all man the safety boats. Jeez, the ship is sinking at that point. It's like the Titanic. Titanic hit the iceberg. She took on water for hours and hours and hours. But then when she sinks quick. And that's the way with the dollar. The dollar's taken on water for a long time, and it's going to slowly take on water. But when she finally hits 70 on the U.S. dollar index, then she's going to sink fast. So anyway, this has been your report on the markets for this morning. Thank you guys for tuning in, and we'll catch you guys later. Bye-bye for now.